This weekend brings a rare opportunity for Sunday afternoon trading in North America. There's a lot of data coming out for China over the weekend, and we could see Asia Pacific markets and foreign exchange kick off with potentially quite volatile moves on Sunday afternoon. Because of the way the market trading cycle works, the trading week begins in Monday morning in Auckland and in Australia and in the Far East, China and Japan. And because of the time difference, this ends up becoming Sunday afternoon in North America. So trading actually starts about 4 p.m. Eastern Time, about 1 o'clock p.m. Pacific Time on Sunday afternoon, giving traders their first opportunity to react to the weekend news. Now, China's markets closed, when they closed on Friday, there's actually some data has already come out. Lending was significantly below expectations, and money supply growth was mixed. The M2 was below expectations, M0 and M1 a little bit above. And there'd been some concerns lately that we could see some tightening in Chinese financial conditions, less lending, and in this case, less money supply, and that's starting to bear out, which raises some questions about the prospects for growth in the Chinese economy. We could see that play out over the weekend when we're getting industrial production and retail sales. Should give people a much better idea of which way China's economy is heading, particularly since the trade data was also disappointing with significant shortfalls, particularly on the import side. So we'll be looking to see what does this mean not only for China's economy itself, but broader implications for commodity demand. So I'm going to start off here looking quickly at a few charts where we could see action on Sunday off of this news. Clearly, we'll start off with the Hong Kong 50, which tracks the Hang Seng. And looking here, we can see that since bottoming out back in the beginning of February, it had been nicely trending, but this uptrend is broken earlier at the beginning of May, with a fairly large downward breakaway candle there. We've seen the momentum turn downward. Now, the one thing it's got going for it is it's oversold, but still, it's taken out the 20,000 round number and remains below it. It's sitting on this Fibonacci level here near 16,695. Next Fibonacci support down here is around 19,090. That was 19,695, and up here it's 20,000. It's got to clear 20,000 to signal an upswing. Next resistance after that near 20,200, 20,400. If we do see a breakaway downward again, we could see this 19,000, 19,100 area tested for the Hang Seng. Some crude oil could also be active on this news, particularly because crude oil's had a pretty good run lately. It shrugged off the trade data, and underlying things have been pretty good. This is a pretty solid uptrend. Beautiful golden cross here on the WTI chart. Also a golden cross on the Brent chart. We are seeing it level off here, but we've had a pretty good run. We've got a small negative RSI divergence here. Tells me upward momentum slowing. We could easily see this go from an uptrend into a sideways consolidation phase, maybe even a correction. Moving averages are at 40 bucks even. The price is currently sitting about 46. In between, there's this one here, 44.80 Fibonacci, as well as 43.75, and this channel support in here in and around 42.50. Also, we'll take a look at a couple of currencies. We have the Aussie dollar, could be quite sensitive to data in China. As we can see, the Aussie dollar has been in retreat lately. Part of this is a function of a rebound in the U.S. Part of it is a function of the surprise interest rate cut the RBA gave back here on this day of this big bearish candle. We've seen it continue to trend lower. It's now testing its 200-day moving average near 72.60. If that breaks, the next support is in and around here, around 71. If it bounces, initial resistance about 73.10 and then 73.90. But the RSI is still pointing lower, and it's not oversold, so there could be room for it could still be vulnerable depending on how the data shakes out. We'll take a look at Kiwi dollar quickly. Kiwi dollar is another one that's been weakening. It's broken its 50-day average here, double top, and it's broken a channel as well. That was a rising channel that's now been broken, and the breakdown point here around 68.50 has become new resistance. This is starting to trend lower. RSI confirming the Kiwi dollar is starting to trend lower here. Initial support is about 67 cents, and then the 200-day average here around 66.45. So we could see action in a number of markets Sunday afternoon to kick off the new trading week on China data.